Hey guys, good morning. Today is Sunday, February the 5th of 2023. And I wanted to do a follow-up with the natural gas. I wanted to show you some other things. And I just want to stress that just because the daily cycles are up doesn't mean you have to go in and buy it on Monday. There's a lot of moving parts. So every time I tweet, I always emphasize there's a lot of little moving parts, other little things that are kind of interconnected, and some things may work and some things may not work. But overall, you want to kind of get the big picture. That way you can make a better decision in regards to your risk management and your money and investing. So you want to kind of look at everything and then kind of focus in and zoom in and then decide what you're going to do. So just want to stress out, just because the daily cycles are up doesn't mean that we're going up. There's a lot of stuff happening, a lot of geopolitical stuff. It's just a big mess if you look at it. But within that mess, there's probably some opportunities, but you have to be very patient and be like a sniper. Just kind of, zoom in. And when you see the opportunity, pull the trigger. So with that being said, let's get to the charts. This is a seasonality chart of natural gas. And you can see that in regards to dates, in regards to seasonality, we're using the 5-year average, 10-year average, and the 15. There's a cluster around February 9th, 10th, around there, where things, potentially could do a swing low, swing bottom. So it could be that we could continue pushing lower, and somewhere around that time frame could turn around. I'm saying could. There's a probability that could. We don't know yet. We'll see once we get there. But I just wanted to give you heads up. And then natural gas, on average goes and does a little bump to the 16, 17, pulls back again. Maybe it looks like it's a fail new low. This is where, investors and bullish investors wait for that pullback. And they get in and then they ride this wave. And it looks like natural gas using seasonality, goes all the way up to like May, tops out pretty much in May, maybe does a little bull trap in June, pulls back, and and you can just see the chart. I'm just showing you everything. So keep an eye on the 9th. I know the 9th is a Friday. And then the 10th is a Saturday. So, it could potentially make a low there. It could make it on Monday. So, one of those things you just gotta have to eyeball it and just kind of look at price action, look at volume. Volume is key. Gann always said, look at volume. Look at price action. And, look at other stuff, commitments to trader report, all these little things. But, in real time, you want to look at volume and price action. And that times in sales and see, what's happening around this time frame. So I just wanted to show you that. In regards to trading days, I wanted to show you that I looked at, what was positive days for the month of February. And second was positive. The 10th all the way to the 13th is positive. But, you only have one day here. We know seasonality wise, somewhere around here, that's what it makes that swing low. It kind of makes sense. You got the 10th, you got this day, and then the weekend kicks in. So you ran out of trading days there. And then Monday. And then, from here, it's negative. 17 is kind of flat. And then the 20th, and the 20th and the 21st are positive. And I can't remember if the markets are open on Monday. But those are the days. And then that's it. So these days are positive, flat, negative, positive, and you got seasonality that kicks in. You could probably say between these 2 days, and then this was a positive day. So that's what I looked at. But, overall, February is a negative month. We're here, and it could continue pushing lower, until maybe here. Probability are high that it could turn, or it could turn on Monday, We just got to look at price action. Or it could be a little fake out, pop, and then push lower and maybe somewhere around here. So, those little things you got to kind of bounce around your head. But I figure I showed you, in regards to February, what positive dates, on average return were green. And that way you could kind of, have an idea in regards to dates. Hey guys, so this is my Elliott Wave. And as you can see right here, it has an A, B, C. And it's crashed down. You can see the Stokes are negative. And this is the monthly, and you can see they only have the 20 SMA. I always color it yellow because that's the natural gas is below all the moving averages, all the ones I use, the 20, the 50, the 100, the 200. It's all negative. So I just figured I just put one just to keep the chart clean. If you go to the weekly, kind of reminds me of the dollar, where it did a wave 5 up here, and it has a 1, 2, 3. And, there could be possible a wave 4 going up, and then a final wave 5. That remains to be seen. That's the, what the Elliott Wave count is in regards to this software. So we'll see how this is going to, play out. But we know that, February, we have 2 cycles that bottom out on the weekly and 1 in April. We also know that seasonality wise, February is very weak in natural gas. And also in regards to seasonality dates, we already know somewhere around the 9th and 10th, on average between the 5, the 10, and the 15 year, it makes a swing low. So we got a little more clues to build up a thesis on, what could we do in the next couple of weeks, or, or by the end of this month or close to it. Without, trying to catch a falling knife. And you can see that the Stokes right here are already kind of bottoming out. Now we go into the daily chart. What's interesting is this is already indicating a wave 5. Kind of makes sense. Got a wave 5 here. 1, 2, 3, 4. And we got 1, 2, 3, 4. And then it has a 5 here. Can it go lower? Yeah, it could go lower. There's a projection line, 0.54 cents. It could go down there. I wouldn't rule it out, but that's a possible wave 5. I mean, it goes negative, but we'll see. I don't think it's going to do that, but you never know. Crude, we never thought crude would go negative, and it did a couple of years ago. So I wouldn't rule out anything could happen in this crazy world. But, it's at a wave 5. You can see that the Stokes are very flat in this line. When it shows up, it just tells you that, it's just consolidating. I mean, not consolidating. You can see the price action is going lower, but the Stokes are just kind of giving you a heads up. We're like pretty much at the bottom of the barrel, waiting for, one of these moves to come in like this, somewhere around here. And you already know the dates in regards to that, and the probabilities of that all playing out. Let's go to our next chart and see what we have there. This is going to be my final chart. This is what I call the master chart. I'm using data from like 1993, somewhere around there. And you can see what, natural gas has done in the past. If you want to build a profile on natural gas, you kind of pick out the peaks. Be like, oh, look at June. Made a high in June. You can see March. Made a high in January. Made a high in February. Even December. You just pick some peaks and just kind of put some, months where you see where it made a high. November. You can kind of see this kind of random. And this one's in August. And then you could pick the lows. June. Bottomed out somewhere around February. That kind of makes sense. April, September. You get the idea. Just kind of look at, months where there was turning points, and then just start making a profile. So what I do with the master chart, this master chart is scaled at a 45 degree. So everything is going to be moving in 45-degree scale just to keep things accurate when I, do my drawing and my geometry. And then I'll create another one just to do more of the analytical stuff and look at other different things that I use in regards to Gann's technique. So we start off with the Gann fan. As you can see, this is the 1x1 right here. And it looks like right here, this is the 2x1, 2x3, and it's stalled right there. Gann said to put Gann fans, but you got to make sure that they're scaled. Because from my experience, when they're not scaled, sometimes they don't work. But you can see that here, it caught that high, and now it's kind of floating around here. And then you have to go and use one from the bottom. I haven't used any of these because none of these are working in regards to this price action, in regards to time. So you first have to start with the closest bottom to price action. And you can see that right here, we are finding some support right there. This is the 1x1, 1x2, 1x3, and 1x4 right here. And it's finding support right there as of right now. Is that going to hold? We'll see. If it kind of just goes sideways here, then that's promising. But if it pushes lower, it could test this level right here. So you never know. Another point, just in case, this is not it and it's more closer to what I call the war zone, which is right here, more fractal, closer to what's happening in the range. There is some support coming over here, and that's somewhere around 218, somewhere around there, depending, when it hits it in regards to time. But somewhere, as of right now, 213, 218 is going to be hitting the 1x3. This is the 1x2, and this is the 1x1, and it's at 45 degrees. So you want to make sure that your charts are scaled to that. Next thing, let me figure out the pitchfork. So I took this pitchfork from these pivots, and you can see that we failed this angle right here. And this is the 50% from these different swing points. And it's now at the 25%. This is the 75, 50. And right here, that is 233, 231. So that could be potentially support also. So be mindful of that little area right there. In regards to Gann squares, I squared the range from this low, the lowest low I could find, all the way to this peak. And then all this information right here, I use as Gann would. And you can see how it picks, some peaks here. This is a 1/8. This is a 1/4, 1/6, 1/8, and and it goes on. And so there's a support coming down right here at $2.09. And we haven't gone there yet, so I'm watching for that just in case it pushes lower. That could be the next potential support. I went ahead and picked it from here and squared it out from here. So these are the two anchors that I use, natural gas. And you can see, that there is a timing coming in on February the 22nd. This is the 1/6, and that's the 1/8. So the 1/6 is coming February 22nd. So I'll jog a date on that. Like if it's on the weekend, then try to get to the closest trading day. And in regards to level, there's free fall here. The next support, scoring the range from these 2 points, will come at $1.48. So I'll keep an eye on that level if it continues pushing lower. And then I get even more fractal, where I'm just getting closer to the trading range, or what I call the war zone, which is just this little area right here. And you can see that there was a strong level right here at $2.50, and it cracked below it. And there's a timing point coming, and that's May 7th. That's kind of far away. But right now, this is all free fall. If it continues going lower, it's going to test this low right here. And if it does, which is $1.48, it tests that, and I see that it bounced, and there's a fail new low, and then it goes up. That's promising. But if it goes down, tests it, fails, and pushes lower, that's not good. But if it tests it from above and then finds support and then goes up, that's good too. So those are the things that I'm looking at. I got to work on my timing. I want to look at, numbers in regards to peaks. There's a lot of stuff in regards to Gann that you have to, do to get an edge and get an understanding of what, natural gas, does. If there's a pattern here within these highs to highs, low to low, when this low hit, how far that was from here in regards to dates, weeks, months, how long, from year to year. And once you kind of build a profile on this, you kind of get a better gauge if you can find some patterns and some other techniques of Gann where you could kind of, when you forecast, you're either close or you nail it or you fail. Those are the options. You either nail it, you're off by a couple of days, or you just fail. You were just wrong. And I've experienced all of those. So I'll leave it at that. I just want to give you just a kind of glimpse of what I do here, and just be cautious. Be cautious. This is very ugly. Is it going to go down forever? Not forever, but there's a lot of support here. Look at this pivot right here, and look where price action is. It's at 241. That could hold. You want to put pivots, monthly pivots on all these little swing lows. One here, one there, one there. And from here all the way down to here, you could just shade this whole area. That's all going to be supply, demand zone. This was all supply zone right here, right here, right here. This is going to be all demand zone. And I'm going to be working and updating my chart. So it could make sense when people look at the chart, be like, okay, yeah, so this is where people want to, accumulate. And wait for this next run, to go like that, or go like that, make some money, or even go like this, or like this. That's what you want to make. But you want to kind of, get that little demand zone area and know what it is. And then, do some homework, due diligence, and look at key levels and timing and everything. And, everything else that I watch, and just kind of see, when all that stuff lines up, pull the trigger and see if it, does that, or if it goes like that, or if you were wrong, it goes like that. Well, hopefully you guys have a great Sunday, and I'll keep you posted on my thoughts on natural gas.